Good morning, my name's Carol Harmer from the International Trading Institute. You will find all the videos that I will post will be on our YouTube channel, so if you would like to subscribe and hit the like button, great. We aim to produce 2 to 3 videos a day on markets that are trading volatile or anything that I can see that will enable me to be able to pass on to you some little trading tips. Now, the International Trading Institute is a new thing, and it's going to be, our aim is to teach the retail trader how to trade like a professional trader, so you don't get chopped and turned like what happens at the moment. That's our aim. So if you're interested, please contact ITI. They have a big back office with a lot of support, so questions will be answered, and videos will only be on this channel. They won't be on Charmer Trading anymore. Okay, without ado, we'll have a look at the euro. Now, as you can see, the euro had quite a narrow band yesterday. Now, what I'm seeing is the fact that it's gone up quite a bit. We've gone through the previous highs, okay? I mean, obviously, we haven't gone through all of them, but I mean, on this leg up, okay? Now, I use pivot points, and the reason I do that is because there's such a quick and easy way to grasp what the market is actually aiming for if you're not au fait with charts. So these pivot points, if I just pull them over here, it's so simple. All you do is set your open, high, low, close, and it gives you all the mathematical calculations. Now, these are excellent for something like gold at the moment, where gold has nothing to aim for because it's in uncharted territory. But we'll go through that on another video. So that's what I do. It's just a quick mathematical calculation, and it really does work, because you will find at some stage during the day, the market will come back and it will test that daily pivot point. If you can see here, you can see that the high of today has just kissed that daily pivot, which is 113.30. So we've gone to 113.49 and come off. Now, the market is looking to be a little bit overbought, but again, you need to look at a longer term chart to see exactly, what are the weekly charts doing. So we'll just quickly have a look. Yep, they're overbought as well. So we know the market's overbought, and we keep that in mind. Now, if you're trading the euro dollar, you really need to be looking at the Dixie, which is the dollar index. And the reason for looking at the dollar index is because the market follows the dollar index. It's the inverse, and it's heavily weighted in the euro favour. So you have to be aware of where the market is trading. You don't have to trade the dollar index, but just keep your eye on the dollar index, because it can show you turns in the market, which is what you're looking for. So you go back to the dollar index, you can see where it double topped up here, down we came, up, little bearish flag there, and down we came again. So in our minds already, we know where the market is going to aim for. So we look at the weekly on the dollar index. And you can see that we have been this low before. So, you're going through historical levels here. The weekly charts have just passed the 200-week moving average, which is quite significant because the market does love to test you. It really does. You can see where it's overshot on this point here, but all in all, it looks like it's going to go lower. As I said, if you're trading the euro dollar, you have to look at the dollar index chart. And everything looks wonderful there, so you're quite happy to be long of euros, short of the dollar. So with the euro dollar at the moment, what you're seeing is quite a steep move higher, and markets, they don't like that. And when you look at overbought, oversold indicators, especially with an RSI, remember an RSI is a relative strength index. So that means the trend is strong. I could go on and give you countless things that I've looked at over the years where you've had the RSI at basically along the 10% zero area, and the market still come lower. So it shows you what you should be looking at. If you look at stochastics, they're leading indicators. So again, you want to be aware of where they are. Are the dailies tying in with the weeklies? Are the weeklies tying in with the monthlies? Do your homework. So let's have a look and see what we can see in the euro for today. Okay, I see this easing back. Now, markets don't have to go in a direction to ease these indicators. You can go sideways, which is basically what you're doing, or you're making a little pattern. We will deal with patterns later on, but markets, they're like a pause for breath. They make a big move and they go, hang on a minute, let's do a little sideways move, let's do a little bullish pattern, but something just to ease and give the market time to recoup, profit taking out of the way. Where are we off to now? So that's what these are. And when we discuss patterns, which I'm not going to do yet, but when we discuss patterns, you will see, these patterns are numerous. And there's always a saying in trading, history repeats itself. It does. And so you have to be psychologically in the right mind to be able to negotiate through these choppy times. And charts and technical analysis just give you that edge. It shows you where to go into a chart, into a trade, out of a trade, where your stop loss should be. So, you can put trades on and go away. And any trader, I think, should never look at anything below a 4-hourly chart. You don't need to be trading all day, every day. You really don't. In fact, it's counterproductive. Okay, because you're going to change your mind so many times. Whereas if you have your strategy, first thing in the morning, put your orders in, leave it, go away. So let's see what it's going to do today. Again, this little pattern here is building. We could go down and test our new weekly level. We could even go down to test the moving average support. If you look at what I'm going to do now, if I put a Fibonacci retracement on it, and what I take it from is where the market started its move higher, you will find that some don't use the Fibonacci levels the way I do. But, this is what makes a market. We can't all be the same. Okay, so I've put the Fibonacci level on that high of the 11th of April. So you can see it's already pulled back below the the 23.6, we're making our way up. But you see where the 38.2 comes in at the weekly pivot. And that's really important because that would ease the overbought conditions and we're good to go again. One of the patterns, this sort of pattern, when it makes a break, whatever this move was in points is what the next move is anticipated to be. So you have to do a little bit of homework. You have to put your levels, write them down, do whatever, but just write them down. Be aware of the major levels, because if you're not, then obviously you're going to be missing out on so much information. So I hope that you've enjoyed these videos. We will be posting every day, probably 2 in the morning and 1 before the New York Open. Okay, as I say, please go to the International Trading Institute website, International Trading Institute YouTube channel, subscribe, like, and you will have the facility then to see everything we post. Okay, have a great day, guys. Bye.